Another big earnings story outside the financials is really Taiwan Semi, driving the semi space to a new record high if you're looking at the SMH. Our Christina Partsinevelos, as promised, joining us right now here at Post 9. Christina, looking at this report, is it exciting that we saw profit jump by 35%, or is it more exciting the fact that this is the company that supplies so many other companies like Nvidia, AMD, and Apple?
The second. That's because they have a view into the future because these customers are spending with TSMC. They're the largest chip contractor in the world, and they're saying that they're pretty much sold out in 2026 at full capacity. Their spending CapEx has increased to $56 billion just this year, which is a record for them. So that is showing that there is demand for the chips. It doesn't necessarily mean that it's going to see that these chip companies are going to see a return on investment. And I say that because the CEO of TSMC was asked on the earnings call, is AI demand real? And he responded that he is nervous about it. He used the word nervous, and that he said that with the $56 billion in CapEx, if they don't spend it correctly, it'll, quote, be a disaster for TSMC. So what he's telling us is that TSMC is growing. Gross margins are intact. They're going to spend over the next 3 years. All of their customers are spending and building chips, but we still don't know necessarily if that demand turns into future revenue streams for all of these firms.
So I want to ask you a question. So TSM, they supply for Apple, Nvidia, AMD, Qualcomm, Broadcom, and Amazon, all the big players in there. Is this
Apple too?
I already mentioned Apple, but yes, you're right about Apple. Is there one company that this is a direct read on? Is there one company that gives us more insight as opposed to the other ones?
ASML is a great example because they have a full monopoly over the market with their lithography machines. The fact that TSMC is spending so much, that's why you're seeing their market cap hit $500 billion for the first time ever. It's reading well across the semi-cap space. And just one more point. Some may argue, but semi-cap equipment companies have really jumped over 15% year to date for many of these names. B of A, even in a note today, was saying that it's not as crowded as you think because the semi-cap names have climbed on the memory narrative, that memory is in short supply, that they haven't really climbed on the fact that the foundry business is still really strong, the logic business is still really strong.
All right, you mentioned ASML very quickly. Let me get to you, Jim. Malcolm, you own ASML, also at a record high today. Your view on the chip trade right now? We often talked about Nvidia kind of being dead money over the last couple of months, but obviously we're seeing an acceleration today when it comes to chips.
Well, I think it does say great things about ASML as a shareholder in the sense that the $56 billion of CapEx that TSM is talking about, more than likely the lion's share of that goes to ASML, right? They're their biggest customer by a long shot, especially as you hear Jensen Huang talking about now going to mobile, talking about going to autonomous driving as sort of the next frontier for where those chips are going. So it makes perfect sense that they'd have to retool those machines or upgrade those machines to get the smaller nanometer chips that can fit into smaller devices, which bodes well for ASML regardless of where those orders come from. So I think that's a great indicator of why the shares popped 6 or 7% so far today.
Jimmy?
For Christina, one of the risks we were talking about a year ago, we're not talking so much about now, is China, at least in my opinion. And I observed that nobody's really talking about it now, and yet there was an IPO not that long ago, I think in the last week, for CMXT. I might have the letters background, but that's one of the right. So one of their semiconductor up-and-coming companies. Other IPOs have come out in the AI space, and I think the concern here, as I see it, is that China really does become insular. Now we're supposedly allowed to sell them H200 Nvidia chips, but they kind of don't want it. We don't know how much of that is negotiation or how much of that is real in terms of China wanting to say, we want to do it all ourselves. Is that a risk?
Of course it's a risk. The self-sufficiency of China, which is why Jensen Huang goes on these trips and continuously talks about all of the great developers that come out of China, that it's a $50 billion market opportunity. He tends to visit Asia right after Davos, so I'm sure we'll get some headlines out of that. China is moving forward. The goal for them is self-sufficiency. So even if the government or regulators approve the import of some of these H200 chips from Nvidia, I think it's going to be a case-by-case basis. And I think it's only going to go towards the hyperscalers, the larger ones that are really building out their large language models and need the most advanced chips. But China is capable of taking Huawei chips that are less powerful, I'm making it very simple, pairing them all together, using way more power that we would use here in the United States because it's not an inhibitor over there, and producing models like DeepSeek and the next iterations of DeepSeek going forward, and Quen and et cetera. So I think that is the biggest fear, which is why sovereign AI plays such a strong role to offset that weakness that a lot of these firms had from China.
Can I get technical real quick with mentioning Nvidia being dead money? It's moved up a lot today, and look at it, for those follow the anchored VWAPs. from the closing high, we're back above there. 188 Nvidia is actually a really exciting level to see here. If it can move a little bit higher, it goes above the late December high, and then that earnings where we reverse pretty heavily, 196. I think the space is obviously getting a lot of lift here today, and I think you're going to see Nvidia wake up. If it gets above 193.5, 196, look out above. We're going to head for a new record high. You're going to see some tremendous flows.
All right, so right now, looking at Nvidia right now, it's trading at about 188. So you're saying we're on pace for a record high? It's about 3% right now?
No. We're at 188 right now.
That's what I'm saying. You're saying it's on pace for a record high?
No, we're far away from record high. Record high is what, 210, 220?
No, I'm saying you're saying that's the direction it's going.
That's the direction that we're going. If we get above this resistance, I think you're going to see some solid flows. And let's not forget that Nvidia, from a multiple standpoint, at 25 forward, is one standard deviation above is below its 5-year average with 28 and change. So I think it's an exciting name to keep an eye on right here.
Since you're bringing out the technicals, what's the level of resistance? Because I'm sure people are like, okay, what is that level of resistance?
193.5 and then 196. 196 was the high the day after its earnings. So this is it's chewing through and getting above that anchored VWAP, which a lot of people watch from its closing high, and I think that could start to excite some flows.
All right, Christina, while we have you here, I want to ask you a question because I was talking to DeWarja McNeil from Longview Global earlier today just about the trade tensions between the U.S. and China, and a lot of our allies kind of leaning towards China, not because they love China, just because the U.S. has become more volatile. Is there a chance that China's just using the, I guess, the customs rejection of these chips as a bargaining chip? The chips are a big part of the bargaining chip, along with the critical minerals and the rare earths. Is there a chance this is just a little bluster, if you will, China pushing back just to kind of build up its chips in this negotiation? They really do need them.
At first, I thought you were going to ask me about Canada and the fact that you have so many other countries that are pivoting
Mark
to China.
There today.
Yeah, exactly. Yeah. So on terms of the trade front, we should be maybe a little bit concerned here in the United States, and I'm Canadian. That's the reason why I bring it up. But for China, of course, Nvidia is being used as a play. They went after Nvidia for Mellanox, an acquisition back in 2020, but they went after Nvidia several years after the deal went through. Why? They're just trying to nitpick and find issues with the company to use Nvidia as a poster child, or AMD, or Intel, or Applied Materials. A lot of these names have been caught in the crossfire. And just one final thing, you're talking about just the resistance point at 193. Nvidia has been stuck in this range for quite some time, and I think that there's been this zero-sum trading game with either software versus the SMH. So you're seeing with Nvidia, it's just like, how much upside is there? Even if you can argue the valuation has come down and it's much cheaper than a lot of other chip names. I just wonder, is that enough of an argument? And that's the reason why people have stayed on the sidelines for Nvidia and then moved into the other parts of the play, chip world, I should say.
Well, software has been hit pretty hard here at the start of the year, and that could ask the question: where's that money going to go next? Now, obviously, there's some really tremendous outperformance in other spots. You've seen IWM really breaking out. You're seeing the staple names have a great run. Industrial's doing well, and energy doing well. But you know what? I think there's money on the sidelines, keeping an eye on some of these ones that have consolidated very well. And let's not forget, this is a big long-term uptrend. The trend is your friend, and we're really seeing this nice consolidate. I think it's going to be breaking out here.
Bill, are you saying you think software is perhaps an opportunity? Because boy, that's been tough, man. That thing, every time you think it's getting a bid, it just opens a door underneath you.
I was kind of saying the exact opposite.
Okay.
You're seeing the flows out of software. Now, I mean, there are some names to kind of pick through now. Synopsys looks like it's coming alive. There's some spots to look at in software, but I'm not very excited about software. I'm saying that money.
I got it. I wanted to clarify.
Before we get too far away from chips, we kind of already are. Malcolm, you're also an Nvidia shareholder. Any thoughts about this read on Nvidia and maybe some other chip stocks that you may own?
Yeah, Bill took it technical. I'll go fundamental. I'm curious to see what the guidance related to Rubin is going to be in the second half of this year. I think that'll be make or break across the board for Nvidia, because the upgrade from like 8 to 72 chips on a cluster is supposed to be a massive improvement for them, which would make all the difference for the hyperscalers that are still buying Nvidia chips, but they won't have that read until probably the second half of this year. So we're kind of just waiting and hoping until we get to that point. So it wouldn't surprise me if Nvidia stays super range bound until then, because there's no other real catalyst to get us there.